1Million Strategy Roundtable for Entrepreneurs. Unfortunately, I am not on camera today, which is highly unusual, but I have no internet connection. And we were just chatting that we are at the mercy of the internet, and when we don't have internet connection, all our workflow gets completely disrupted. However, we will try our best to stay the course. This is the 584th 1M by1M Roundtable. We started doing these roundtables with a small experiment way back when it was in 2008. And my friend Didi Ganguly, who's also friends with Bhaskar, whom you're going to meet soon, actually suggested to me, and my first book was coming out, and Didi said, Shramana, let's try something in our Dim platform, which was the online video conferencing platform that we used at the time. And let's try to do something around your book on our platform. And that was the original experiment that then led to these, 584 free mentoring roundtables and numerous thousands of private roundtables in our premium program, and also numerous interactions of all kinds through this mode of communication. 1Million was born out of this experiment. Today we are the first and possibly only global virtual accelerator for technology startups with the mission of helping 1 million entrepreneurs reach $1 million and beyond in annual revenue. The event is being recorded. Every single recording is available on our YouTube channel, 1M1M Roundtables. Today's hashtag for Twitter is 1M1M, and on Twitter I'm at Romana, and 1M1M is at 1M1M. These are the call-in instructions. We're not quite ready for you to call in yet, but we do want you to participate as much as possible, and I will open up the line for Q&A. You will be able to use your computer audio as well to call in, ask questions, etc. In the meantime, we have scheduled programming during which you can participate through public chat. And if you ask me questions, Maureen will read out the questions to me, since today I cannot see the questions, but normally I can. All right. We are going to start today's session with a conversation with Bhaskar Ghosh, who's partner and CTO at 8VC. We're going to learn about Bhaskar's firm, but let's start, Bhaskar, with a bit of your background. You have a very interesting background, and you've come up the technology track. So talk about what you've done before switching sides to the venture capital world.
Sure thing. Romana, thank you so much for having me, and good morning, everyone. I'm an accidental VC. Did a PhD in computer science many years ago and spent about 24 years in industry, built database kernels at Oracle, and then went to Yahoo, ran a company called Right Media there, which is the biggest advertising exchange of the time. And then it was lucky and exciting to be the founding head of data infrastructure at LinkedIn. We got to do a lot of the open source stuff that you guys might have heard about, built a lot of backends that LinkedIn still runs on, which is very exciting. Then wanted to go run kind of my own gig, and went and ran a small fintech company called NerdWallet, which we just went IPO about 6 months ago. After that, I retired. I was actually going to go move to DC to join Hillary Clinton's administration, but that didn't happen. Became an angel investor, advisor, and through a set of happy accidents, came to 8VC for a year and stayed, and then became an investor and focus heavily on enterprise infrastructure now. But we can spend more time on the investment track as part of the chat.
So Bhaskar, what is the focus of 8VC? What's the investment thesis?
Yeah, so we are based in San Francisco, Austin, and New York. We manage about $6 billion and are currently investing out of our fourth core fund of $640 million and our second growth fund of $800 million. And in terms of thesis, primarily B2B software. Our fund's core investing principles have been around what we call smart enterprise, our founder, Joe Lonsdale, wrote a wonderful article back in 2012, 2013, which has still proved fairly prescient. So the idea of smart enterprise is taking legacy verticals and disrupting them with data, AI, cloud, and automation. It applies to both vertical and horizontal software. In the last 5 years, we have moved much more deeply into horizontal platforms and infrastructure in a big way, and also started focusing on developer personas in addition to business and product personas. So for my track, which I tend to focus very, very heavily on platforms at all the tiers, cloud, data, AI, all the way to APIs and application infrastructure. And just wanted to call out that, while we are an investment firm, we are very proud to call ourselves a build firm also. So 23% of our core fund is actually allocated to what we call the build program, where we incubate almost 3 to 5 companies every year, all the way from health IT, bio IT to insurtech. And now I'm actually starting a new company in the area of enterprise software security. So we think of ourselves, so our firm has a fairly strong entrepreneurial and operational spirit, and I'd say we think of ourselves more as builders and less as investors. Coming back to the investment thesis, as I said, vertical SaaS with very heavy focus on data, AI, and automation was the core. And now, we have also added to it, and vertical SaaS took us to legacy verticals very productively, say in fintech, insurtech, logistics, transportation, supply chain. And then we started doing health IT and bio IT before I joined the firm. And just to repeat myself, have now moved fairly deeply and widely into infrastructure at all levels.
So can you talk about the early stage investment work that you do? What check size do you like to write? What do you want to see in a company before you're willing to write those checks?
Yeah. So our core fund, we focus on early phase investing, so pre-seed, seed, and Series A. Pre-seed and seeds can be anywhere from $500,000 to 4 million. A's can be anywhere from 5 to 15. We have done a few B's also, but those are more rare for our core fund. They can be anywhere from 20 to 35, so fairly large checks. The growth checks from our growth fund can be much larger, and I'd say, we do a few in new companies, but many of them are kind of larger reserves coming into our faster growing and larger companies.
Now, when you do pre-seed, let's focus on the pre-seed seed
Yes.
First. When you do pre-seed, are you investing in concepts? Are you investing in people, or are you looking for a certain amount of proof points, MVP? What is the sweet spot?
Yes, sorry, I didn't address that. Pre-seed and seed, I would say, if you look at founders, product, and market/TAM, we focus fairly heavily on founder DNA and on the market size of the domain that the founders are going after. We are not looking for product market fit. We are not even looking for a product. We tend to work and gel very closely with highly technical entrepreneurs. So I would say there's a bimodal DNA there. We do back, we do back very early phase, first time entrepreneurs often coming out of schools. We have a very strong campus program, at Yale, Caltech, Harvard, MIT, Stanford, and we tend to back programs out of a few campuses, founders out of these campuses fairly heavily. We also find ourselves backing second-time entrepreneurs from our network. The DNA for the second-time entrepreneurs tends to be domain experts and mostly highly technical founders. So highly technical founders and high-time areas would be the common pattern. As we do larger seeds, we tend to look for something to have been built already, or maybe an open source project that is already in production, and that's where kind of our open source DNA comes in also.
And what about geography?
Geography, in my personal track, we still see a majority of deals and entrepreneurs coming from the San Francisco Bay Area. So in infrastructure and open source, San Francisco Bay Area is still overwhelmingly the source. In vertical SaaS, we do see New York expanding a bit. We see Boston expanding a bit. Something to call out at this point is, we have become much more serious about the India-US corridor. We just wrote our
Mhm.
first large Series A check into India, into a company called Rocket Lane, coming out of the Freshworks ecosystem in Chennai. We have written 3 or 4 seeds also, and then we have also started writing checks into the LATAM ecosystem. And we have investments in Israel and UK also, and we see that growing also in the early phase side. So primarily San Francisco Bay Area, and increasingly in India as well as LATAM.
Okay. Now, what trends are you seeing in your deal flow right now?
Trends, I mean,
That, like highlights of, there are general trends that we know we cover intensely. We cover AI intensely. We know there's a lot going on in fintech. We cover that intensely. There's a lot going on in IoT right now. There's a lot going on in digital health. Those are kind of the broad trends, but are there specifics that are, slightly more interesting, more insightful things that that have caught your attention?
yeah. Um, I'll probably give a slightly boring answer to start off. In the track that I am running, we still see, which is all things data, AI, cloud, all the way to APIs and application infrastructure, all the way to edge, in fact, and for like data aware and AI aware applications. We are still seeing a very heavy uh, and very productive ecosystem around open source projects getting productized. So that continues to
Mm-hmm.
be that continues to be a fairly ripe area, and given our background, it's something that we still continue to focus on. We continue to see legacy verticals, whether it's healthcare, logistics, uh, travel, e-commerce, and fintech, getting unbundled and becoming API first. And we see a propensity of not only workflow automation, but also of horizon of kind of verticalized infrastructure platform plays coming into these verticals. So in terms of thesis areas, we see as enterprises are pulling on the software side to become more data first, AI first, API first, cloud first, and also security first, we are seeing a fairly secular trend in software startups in that area. I would say that continues to be important. We are still seeing, despite the downturn, second-time entrepreneurs coming into the fore in these areas. And
That doesn't surprise me. Entrepreneurs, once they're entrepreneurs, cannot stop being entrepreneurs usually.
true, I would
So
say.
talk about, yeah,
No,
go
go
ahead.
ahead. Go ahead.
I was about to ask you about some examples from your current portfolio. What are some companies that you've invested in, especially in the pre-seed stage, seed stage, and do a couple of examples. And specifically, as you were talking about them, explain what is it that you saw in these companies that caught your attention enough for the firm to write checks?
Oh, sure. Um, few examples in the data analytics and privacy infrastructure area. I should call out Acryl, which is taking to building the enterprise grade version of the open source project called LinkedIn Data Hub. The founders are very senior data search and infrastructure leaders that I actually worked with during my time at Yahoo and LinkedIn. So a lot of it was a bet on them, but also on the project LinkedIn Data Hub, which is really hitting an inflection point. In the AI-driven privacy infrastructure area, we did a pre-seed in a company called Lightbeam with very senior technical leaders and builders coming out of Nutanix and LinkedIn. Again, some of whom I had actually worked with, and we feel that privacy is actually, for structured, unstructured data, and for different sort of repositories, is an extremely important area, which is not as well built into and as well understood as it should be. That company is Lightbeam. Um, some of the others are, I would say, Nihilus is one of our API infrastructure companies, which has built a platform which democratizes and scales access to mail, contact, calendar, and has now become more of a data intelligence company. We were there right from when it was actually started, and helped the company grow. That's become a significantly large company. We also, if you look at the Python Pandas ecosystem for data scientists, we did a seed, pre-seed in a company called Ponder, which is coming out of Berkeley Rise Lab, which is building on the open source project called Modin. Other than that, uh, the company we are starting now, which will probably remain in stealth, called Anzena, um,
Mm-hmm.
is is going to be, I would say, in the enterprise security democratization area. I'll just leave it at that. And to call out the last one, very early also, we have backed a company called Infra HQ out of Waterloo with veterans from Docker, which is doing something fairly deep and open source in the area of identity and access management for cloud infrastructure. So I think I called out Acrel, called out Lightbeam, called out Ponder,
Mm-hmm.
called out Infra HQ. These are just some of about 20-25 odd investments we have in this area.
Bhaskar, talk a little bit about this company that you've invested in from the Freshworks ecosystem. Is it built on the Freshworks stack?
The founders, our second-time founders, their first company was acquired by Freshworks. The company is called Rocket Lane.
Okay.
And
Mm-hmm.
we are huge. I just want to call something out. We are huge fans of the entrepreneur ecosystem coming out of Freshworks and Zoho, which are both in Chennai. Which are both, of course, Freshworks has had an amazing IPO, which have almost revolutionized the B2B SaaS ecosystem of India and just put a whole different spin on how go to market is done. Coming back to Rocket Lane specifically, Rocket Lane is built for B2B SaaS companies which are selling software that is complex and needs an implementation cycle. So you can think of Rocket Lane as Asana plus plus for the go-to-market implementation, integration, and customer support cycle for all B2B SaaS companies. And
I see.
and we learned so much from the Rocket Lane and the India ecosystem from the entrepreneurs who have actually they've been doing this build in India, sell in India, and now sell in the US script. Just the go-to-market script about selling into mid-market and SMBs. We are so excited about learning from them. So it's an extremely exciting journey.
Yeah. So, you know this, we have been involved in Freshworks very early on. First 3 years of Freshworks, they were incubated in 1Mby1M. We had just started 1Mby1M at the time. So we saw their early journey. We saw their early journey very closely. Not only that, the first person who wrote about Zoho was myself, because Sridhar Vembu came to see me in 2007 and said nobody wants to write my story because I haven't raised gobs of venture capital. So I'm, sitting here and I think I'm doing something really cool, but nobody's interested. So I listened to him and I thought he was super cool. And if you go back and read what I wrote early on, that was the first story through which the world found out about Sridhar Vembu. So the Zoho, I still remain very good friends with Sridhar. I think both the Zoho story and the Freshworks story, we've had a close relationship with early on. But the reason I was asking about the Freshworks ecosystem is that they have tried to do a bit of a PaaS/API ecosystem on their platform. Are you seeing stuff emerging out of that?
Yeah, so I would say we are seeing one very mature and fast-growing track and two nascent but growing tracks coming out of not just Freshworks, but the Bangalore, Chennai, Hyderabad, in the Pune ecosystem in general, around around departmental B2B SaaS, which is where I would like categorize Zoho and Freshworks. Yes, I would say two things are happening there in terms of product ecosystem. One is exactly what you pointed out, that a lot of these products are are offered as unbundled services with very good APIs so that they are fostering a developer ecosystem on top. That is one. The other is being able to keep CAC low and doing acquisition cheaply while using SEO, SEM, content much more niftily, sitting in India at much lower price points. That script of go to market we're seeing as something exceptionally creative. So that we're seeing in the B2B SaaS ecosystem where they're able to sell not just to large enterprise but to mid market also and still keep it cost efficient. Second and third, we're seeing some amount of movement in developer tools and DevOps and QA, which is a very important area for 8VCA. We are seeing founders doing open source companies out of India from Trivandrum, Jaipur, Goa. We find that
Yes.
extremely exciting. That's number two. And number three is, I would say, infrastructure. If you look at Hasura, if you look at Postman, if you look at browser stack, we are beginning to see more core infrastructure companies around AI and data coming, and a lot of the founders in that ecosystem are they've gone through the Google, LinkedIn, Amazon, Facebook journey inside of India on the development side, and they are starting these AI and data and cloud infrastructure companies. So I would say track
Mhm.
one is booming. Track two and three are definitely showing signs of life, and we expect great companies in all three tracks to come out of in the next 10 to 15 years.
Now, how do you process the trend of the capital? There is a Series A gap. So there's pre-seed, seed, and then there are investors that are doing post-seed and pre-Series A as well, but it's a smaller pool. But the Series A investors want to see a lot in place before they're willing to and they want to write bigger checks. So how do you see this? There's a lot of seed activity. There's a lot of pre-seed activity right now. So the number of startups in the ecosystem is huge. This is more not specific to your firm. I'm asking you generally as an industry observer, how do you see this resolving? Like, is this going to be some of the trends we are seeing is that some of the companies that are, pre-seed, seed companies are exiting into companies that have raised a lot of money without trying to raise as much money themselves. That's just one way this excess amount of companies that are getting started, they have to find some path either to funding or to exit or to becoming profitable.
Let me okay, let me make sure I passed your question right. This is what I was asking you about last night. So what you're saying is so many pre-seed and seed deals are being done. How do these companies stay the course and last long enough and get funded?
Exactly. Because the number of Series A investments is not moving that much.
So let me try to complement what you just said in terms of what we see. So selfishly, just to make a point about 8VC, yes, since we are lucky to have enough capital, when we do pre-seeds or seeds, and the company needs money, we just stay the course. We make sure that our companies are funded.
Right.
So
You're a big enough fund, you can stay the course. But there are so many funds that have positioned themselves as pre-seed funds and seed funds. They're small funds. They can't stay the course.
So I would say we see two things happening. We see larger funds, even B and C funds, coming into seeds, just in terms of finding the best deals. That's also a phenomenon we're actually observing. And as public markets go through a tough time for the next 2 to 3 years, we expect that kind of counter movement of very large funds coming into upstream continuing to happen.
That is not going to be able to address the issue, because the issue is that the top of the funnel is very large. A lot of companies are getting started. A tremendous number of companies are getting started. And there just isn't enough Series A deal. The number of Series A deals happening is just not at that level.
Yeah, and this is this is how I think things will be shaken out. I think if you start a pre-seed or seed company with very little capital, you're giving yourself limited amount of time to build something decent, have a couple of wedge use cases, and be able to show a path to monetization. So, I mean, if you raise only two to $3 million, that's just a risk that you take. I think it's subject, and I think it was still true even before we hit the downturn. I think only the good or the better ones would be able to raise the next round to get to a large series A. So I think in our experimental observations, we have not seen that change, and we think that is healthy. I think what we are seeing changes is good founders with a track record or coming from open source software or having some sort of market credibility are able to raise larger seeds, mango seeds, and they are able to last the course and make mistakes, pivot, iterate on their product, and find product market fit. For seed fund, so before directly answering your question or maybe partially giving you a complimentary point of view, we do feel that capital that seed funds and with like single GPs, and we work with a lot of them and are extremely supportive of them. We find seed funds often offer much more bespoke support to founders that is extremely important, whether it's in talent, go to market, product strategy, tech strategy, even initial biz dev, that larger funds with larger portfolios often are not able to offer. So in that context, we do see that good seed funds are able to back entrepreneurs with less capital and still get them to proof points where good funds can come in and either do like a post seed or do actually series A. So we do not see that trend changing for good founders. What we do see changing, without answering your question directly, is Series A investors are actually asking harder questions today than they were asking in Q4 of 2021. People are looking for more product. I mean, it is becoming less likely now that a pre-product company without several wedge use cases or a few pilots running in production, that they'll be able to raise a large, 10, 12, $15 billion Series A. We see that as changing. We also see Series A valuations as coming down. But your point is well taken that with the lack of exuberance in Series A, this is translating to pre-seed and seed funds having a slightly harder time. In a way, we think it's slightly healthy, and we think that over the next two to 3 years, only the good pre-seed and seed investment, companies will go on to raise healthy A's.
So I have a rather different point of view about the definition of good. Yep. 1Mby1M has a philosophy that is completely counter to this VC obsessed philosophy of Silicon Valley and today the world, because the world has imported Silicon Valley's VC obsession, and I don't like it at all. So as far as I'm concerned, a bootstrap founder who either raises a small amount of capital and continues to build a revenue business, cash business, profitable business, and is a good founder. I don't use the word bad founder for that kind of founder. They may not be fundable at the scale at which large Silicon Valley funds or large funds anywhere, Tigers and so forth, want to fund. But I'm a huge fan of solid, sustainable bootstrap businesses. I'm a huge fan of capital efficient entrepreneurship. I'm a huge fan of bootstrapping to exit. We have sold many companies actually in 1Mby1M where small amounts of capital were raised or completely bootstrapped companies went straight into exit. And I think I would push back on your use of the word good.
Yeah, I think maybe the word is not something that we are debating. I think it's the nature of product market fit and iteration that the company has gone through.
Yeah, the nature of scalability, and hence fundability. You have to have a very scalable, high velocity company for it to be fundable at a Series A level or even beyond.
Yeah, let me add
But
some
that's a
nuance to it. I'm actually going to agree with you too much. It's not going to be as exciting as we want it to be. I think it's much more related to the domain that we're actually operating in. So when we what we see is that it depends on the bucket. If you are going into infrastructure at any level, finding product market fit takes a much longer time. And seed funds, A funds have to recognize that. And if founders need money, a company needs money to iterate, to actually get into production, which for infrastructure software actually takes a lot longer. And stabilization of
right.
these products take long.
Those are deep tech fast startups.
Yes.
Those don't follow the lean startup model. That's right. It's exactly
Yes.
right.
So
So
and
that's a different track. That's a
I
different
know,
track.
and it's a very important track for us. That's what I'm trying to point out, which is why we
Yeah.
invest in open source projects.
Yeah.
Now, if you look at vertical SaaS and you look at horizontal SaaS, by just for like definitional purposes, horizontal SaaS is something like, sales, marketing, HR, all of the standard departments in enterprises, which are not vertical specific. We feel that scrappy and product market fit minded founding teams tend to find these wedge use cases early. I think it's a matter, I don't think that it usually requires a large amount of capital, whether it's vertical or horizontal SaaS. It's a matter of iterating fast enough and being kind of customer first and product first. And we are
And
huge.
domain knowledge, I think domain knowledge is very key in that. I was talking to an entrepreneur yesterday in oil and gas in Colorado, and his company, they're already at 5 million in ARR, and this is a company that is doing, there are probably 20 companies that are really their immediate TAM, and each of these 20 companies are going to be doing, right now they're doing probably $2 million a year kind of business with them, and this number is going to go up just because of the nature of the business. And then there are more companies that are mid-sized and that are going to give them more repeatability and so forth. But if you can get like 5-10 companies that are willing to do $2 million worth of business each, that's your capital. You don't need investment capital. Customer capital is perfectly fine. And you can only do that if you have deep domain knowledge.
You have deep domain knowledge. I think the other part that you might be implying is, I think the cost structure is extremely important in terms of, what sort of a balance of engineering, product, sales, marketing, talent you need, and where they are actually locating. And if you're building it completely in Silicon Valley, the price points tend to be much higher. That's number one. And the other is something that I obliquely mentioned, which is the cost structure of CAC. I think these few factors actually matter a lot in capital efficiency. And founders who tend to focus on that early tend to fall into the sort of the near bootstrap category that you're actually pointing to. And we feel, from our point of view at 8VC, we have always been kind of monomaniacally focused on that, about running lean. And I think what you're pointing out is there are pathways to success without raising a lot of capital with domain knowledge, where you can keep the cost structure much more optimal. And whether that exits to a large acquisition or to a Series C company, that's a separate matter. But I tend to agree with you that domain knowledge and cost structures are extremely important things.
And also business model, domain knowledge, cost structure, and business model. If your business model allows you to do these very large deals where large customers are willing to write you such big checks, that doesn't happen to everybody, right? That doesn't happen to somebody who is doing a $1,000 ARR kind of average deal size business. That's a different price point, different business model.
Very true. And
anyway,
right. Yep. Anyway, this was super exciting. I think we are probably running out of time, but this was a fascinating
Actually,
question.
we have a very interesting conversation coming up. So if you are you hanging on, or are you hanging up?
I will stay on for 10 minutes. You've gotten me very excited. But thank you so much, Sramana, for having me on your show. Appreciate it.
It's
and
a
really enjoyed
pleasure.
the
Very
questions.
nice to talk to you. Absolutely, very nice to talk to you. So, folks, we are going to switch to the entrepreneur discussion next. And by the way, these are safe working sessions. So last night, Roland Van der Meer emailed me, and I met Roland a long time ago. So we've been in each other's orbits for many years, and we had a slot open this morning, and I just asked Maureen to schedule so we could quickly have a conversation. So this is, if you are anywhere in the world and you're trying to reach me and talk to me, these roundtables are a perfect place to come and talk to me, and we can have a discussion of any depth you want, and that can be very quickly scheduled. So the one thing I want to say is that this is not Shark Tank. I'm not going to try to embarrass you or entertain my audience or anything. This is a serious business discussion that we do so that we can strategize on serious business issues. So please do not feel, if you're a first-time entrepreneur or a relatively inexperienced entrepreneur, please do not feel nervous or defensive or anything. I'm on your side. We are all on your side. So this is a safe working session, and that is all it is. So Roland, you did the other switch, the VC to entrepreneur switch, and I haven't talked to you in a very long time, so I'm really looking forward to catching up.
Thank you. Thank you so much for inviting me. That was kind of unexpected last minute, but it's wonderful you could accommodate this.
So tell us, what is working, what are you working on? What is UpTerra?
It's a wonderful story, and it's just in time, actually, because the way I've been working in resonance physics for the last 5 years, looking at how the world really works, and it's a new model of physics, which says vibration and frequency is everything, as Tesla and Einstein and David Bohm, all these amazing physicists were talking about many, many years ago. So what we found, in resonance physics, that everything is vibration, everything is a frequency. So nothing is really solid, everything's electromagnetics. In fact, that table that you're looking at you can hit on it, but it's actually 99.99% space. And so what is it really? It's your biology tuning into the physics of it. And it's remarkable when you start to delve into this, what you can do. I took on agriculture because I've been in agriculture now almost 15 years. I helped start some pretty interesting real asset agricultural firms that are out there, but we're not solving the problem fast enough. Right now, water is going through the roof, meaning the prices of water, the availability of water is really hard to get. We're having agricultural communities being shut down because of lack of water. The second thing is fertilizer is also quadrupled in some places, if not doubled everywhere. Okay, so it's getting very expensive to grow food, and you're going to see this reflected. You are seeing it reflected, and next year you'll see it even doubly reflected in the supermarkets when you shop. So what UpTerra do is trying to solve this problem, and we do it through resonance frequency, and I'll explain. Next slide, we'll hop into it. So the first thing we have to do is, what is water? Water is an amazing substance. In fact, your body is 99% water molecularly. So 1% is really texture, the rest is water. By weight, about 70%. And water is many states to it. In fact, there's a university professor, Jared Pollack at University of Washington, talks about the fourth state of water. What it really is talking about is when you charge water, when it's full of life and energy. Actually, when it comes out of a mountain stream and flowing through a brook and over waterfalls, it's tumbling and twisting and turning. And that's when water is highly energized, and it actually forms a different molecular shape. It forms a hexagonal bond, and we can show you this under electron microscopes, but we actually see it empirically in the plants. It becomes more bioavailable. In fact, most people should drink structured water because your body likes a positive charge. A charge is very healthy, and plants like it too. So the first thing is structuring water, and we do it at 1,000, 2,000 gallons a minute. And it's a mechanical process for us. You can use electricity, you can use plasma, you can use magnets. We do it mechanically because it's the most cost effective at the speeds we're doing it. The second thing we do is then we imprint the water. Water is a liquid crystal. So this gets really woo-woo in a way, but it's actually, Marcel Vogel from IBM has 200 patents on this. How do you imprint water with information? And we have some techniques to do that. The information of a fertilizer. It's a harmonic. Everything's a frequency, right? So it's a harmonic. So we designed gears, and about 5-10 years of research went into this, 2 years of last trials. But let's go to the next slide, and we'll hop right into it. And I want to really show. So what we service is both irrigated farms. So irrigated farms are pivots, which are those long circular pivots that you see when you fly over the fields of farming. If you've seen those circles, those are pivots. They have a circular irrigation or drip irrigation, which everybody probably knows from their yard. We also can do dry land farming using quantum entanglement. We'll explain that. Also, animals. If you have structured water, you put a little test, structured water in one bowl and non-structured water in another, you'll find your dog will go to the structured water 9 times out of 10. Cattle, chickens, all prefer it as well. It makes them healthier, more robust. And of course, indoor, which is the emerging trend in agriculture. How do we grow more food indoor? Highly concentrated growing of food. The Dutch are masters. I happen to be Dutch. I go to Holland a bunch, so they're really good. So greenhouse is another target market. Next slide. So what UpTerra has is 2 products right now. We call one is called the TerraScribe Plus. It's a pipe that we structure the water in, and then on the outside you'll see those little that kind of hexagonal feature there. In there sit coils, Tesla-like coils. They're a different geometry than Tesla would have used because it's more advanced now. It's a fractal geometry, and that impresses the information into the water. So the pipe will actually structure the water. The coils will actually imprint it with the information. And then TerraCell is a remote field management system. We use quantum entanglement. I can get in that in spades, but it's really using quantum entanglement to remotely manage the field and what's going on in the field. And those are the 2 products we offer today to farmers. Next slide. Today, we are in 70 farms and growing very rapidly. We have over 13,000 acres under management, primarily in that, kind of the deep mid-south kind of area right now. We opened up there. We use sales teams that are agronomists. Agronomists have the trust of the farmer, and they realize they're running out of tools. They can't put glyphosate in the field to kill enough weeds anymore. It doesn't work. They're running out of, the soil is very inert. So the agronomists are the ones that say, hey, we need a new solution. Come to us and say, hey, we'll like to sell this and try it. And then we build a reference of trust. In fact, farmers are show me kind of people, and they don't take things lightly. So you have to build a lot of trust to sell to them. You asked the question, what is our sales cost? We modeled about 20%, about 10% commission, 10% for structure for that. It's working really well. Our margins on the devices are around 60, 65%. They will be growing. And then the software and services, remember, we're turning everything into the digital domain. So it's fantastic from the physical to the digital domain. We're doing this, and that's the big flip. Right now in the outdoor world, we don't advocate farmers cutting back too much on their amendments because the real world has lots of things going on it, but they do cut back and they have a lot of savings. In fact, the payback seems to be between 3 and 6 months for everybody deploying this. Next slide, please. And there we go. So this is the physical instantation of the device. You'll see the pipe there in the middle, the gray. You'll see the coils on each side. The little box actually holds the electronics. The next version, 2.0, is right now being shipped. It actually integrates electronics inside the coils. So it's really quite convenient. They just basically add another piece of pipe to their existing irrigation system. We don't affect anything they have, which is really important for farmers. Next slide, please. So this gives you the great example of what we do. This is an almond test we ran in 2020 out here in California. Each of those little dots is a tree. The one on the right shows you the water canopy. Down below is where we treat it. Above is the control. You'll see the more blue, which means there's a lot more water, and that was with a 30% water reduction on that half of the field, and above it was a normal watering. And you'll see just the structured water, how much more water stays in the canopy. And you see the bleed over that happens because water does spread. On the right is the vitality and the vigor of the plant, and the lighter, the more vigor. Same thing happens with less amendments, less fertilizer, less pesticide, the plants were more vigorous. And that's just a classic case of showing what actually goes on in the field. Next slide, please. So here's some highlights. We have done, soy and cotton and peanuts and potatoes, wheat, everything. And I just wanted to show you a sampling. Generally, our yield improvement runs between 10 and 40%. If it's higher, that's great, but we don't really advocate that necessarily. And the reduction should be around 20 to 40% in reduction of inputs and water. So the paybacks are phenomenal. In fact, most farmers don't dare go that far, but they just see the payback in yield and they're super happy about that. And then they're beginning to now manage and monitor all the rest of the inputs to have cost savings there as well. Next slide, please. So this is a little more detail than I want to go into, but this year we'll do probably around $3 million. We'll have 140, maybe more like 200 units sold. Overall, probably manage somewhere around 100,000 acres by the end of the year. We're in the middle of starting a raise of $7 million for the expansion. It's all been allocated, and on the right it explains all that. I don't have to go through that detail. And then the next slide. Basically, this is the whole pitch, and there's a much more detailed presentation and a lot more data in the field, a lot of science behind it. People get stumped a little bit because this is new for people. How do you do this? And when you come to our labs, we're in San Rafael up here, right here in Marin, our labs are, and our agronomists are in the field, of course. But it's remarkable when you experience what you can do with water. And we actually walk investors through that and show them the difference between structured water and non-structured water. So it gets a little challenging when you're kind of breaking new paradigms in physics and bringing it to the world. And farmers would be the hardest audience you would imagine, but they are in a situation where they need help and they're open to it. And they do believe. They're really God-fearing men. This is kind of about God in a way. And I hate to say it that way, but they need to identify. It's amazing.
I find what you're doing absolutely fascinating. I don't know why you were coming to talk to me, and what did you want to talk about? We'll get to that in a minute. Please explain to me what you want to talk about, and we'll do that. Just want to say that there's a company that we have been involved in. My husband was on the board and helped, through the IPO and for many years actually, called ERI in the water desalination area. So we did, work. We kind of were very close to water in a while, and we know all the issues around water and water shortage and all this. So we kind of stewed in water for many years. So it's interesting that you're talking about another aspect of water in agriculture in such an interesting way. So just plain fascination wise, I find what you're doing quite fascinating.
Yeah, it is. It's a journey in itself, basically.
What did you want to talk about?
Well, it's a phenomenal opportunity. Okay, and I've been in venture since the mid '80s, so the whole digital revolution started with a lot of things before Broadcom, which I was probably the only venture investor in. Knowing about that in the transformation from analog to digital was what I kind of spent my career doing. And then the last 15 years in real assets like ag, energy, water, waste, how do we do this better? Because we are not doing good by this planet, and for us, actually. So this is a breakthrough. And when I found a breakthrough like this, I said, okay, this shifts the whole paradigm. And the challenge is, if you taught physics at Stanford, you will not necessarily know that the model is short, okay? The model just doesn't cover it. The model has a different cosmology than the atomic level, than the cosmos, and that doesn't work. It has to be the same model. And that's what this new paradigm is all about. So part of our challenge here as a company is people say, wait, you're doing what with water? And then we can actually experiment with it. Wait, you're imprinting it now with information? What is that? And it's a really interesting dialogue to have. And some people just walk away. They can't handle that the world could be different than they thought it was. And so it's a really interesting investor we have to find that is open, has done some spiritual work, literally, to realize that this is all about vibration and frequency, everything we live in. And if you're Hindi, for example, you'd probably understand it. There's a lot of mysticism was understanding physics before the physics understood it.
Well, coming back to our investors who would resonate with something like this are the people who can handle very deep technology and are willing to take the trouble to understand the physics of it and all of that. So there are investors like that. I can actually, just off the top of my head, think of some of those investors. I can't say whether they will want to do this or not, but at least, if I were referring you to people, I know there are certain people that I would send you to who would be capable of tackling stuff like this.
Well, that'd be wonderful. We do find a few family offices and people that have, understood that the paradigm is not working. And I could go through pharma, I could go through the energy paradigm, I can go through all these paradigms, and they're not working. They're actually not sustainable. And 30, 40 years from now, we're in trouble. Everybody thinks, oh, we'll invent something new, but not in the current path. We are not there. When you look at the resonance of this, everything is about nature. Nature has a model that's perfect to follow. And it's interesting, those people that resonate with it actually say, first of all, they understand there's a problem. Second of all, they say, I've experienced something. I've done an ayahuasca journey. I've done some psychedelics, whatever, or they've been in deep meditation and they've experienced something. They say it is different than they thought it was. And it's amazing, those people that, and there's people like Joe Dispenza, that teach people about things that they never understood before and open their mind up. And then when you begin to understand that this is all about us connecting as humans, okay, to solve these problems together, and it's a whole different path. And it's about your heart. It's about how you connect. And once we understand that, we're connecting to nature, that's what we're doing.
Roland, coming back to where investors are going to, in their, how do you do due diligence on something? You've been a VC, so the question is, how do people do due diligence on it? What's in the images that you were showing of two different kinds of fields, I guess, of agricultural fields, how much of that is quantified into ROI analysis and stuff like that? Do you have all that case studies available?
Absolutely. We, with all those farmers, we call them our research farmer partners, and we gave away the first systems to each one of them. And then for the trials for 2 years, so they would collect the data with us. And then this year is the first year they all bought between 3 and 5 systems. That was the empirical proof they needed. And so we have case studies documented. We have data in the lab as well as in the real field. And we have a really good data scientist who's third party who correlates all that. That's the empirical way to approach it, okay? And that just is the proof most people need. But if you want to dive into the science, it's a whole different trip. Then you have to go through this whole journey. And that's interesting how many people, well, if I don't understand it in the science, I really can't make the investment, even though the empirical evidence is there. So we have a whole path for them, but it takes some learning and some openness and looking at some really great minds to go through that.
Right. No, there are great minds. This is one of the things that's good about Silicon Valley is there are great minds. I think if you can find the right people, some of them will at least attempt to understand it. I do think what you're doing is fascinating, and some of it is proof is in the pudding. You have been able to sell a fair amount of it and show that it works to the customers. So ultimately, it's customers who validate things, and that's going to give you a lot of help in finding investors who are willing to take a look at it. So let me, we can come back to more discussion.
I'll give you one more example, just real quick. Even in the university research centers where they, do agriculture, they're sponsored by Monsanto, almost 100%. So there's really hesitancy to kind of go there. And then you find the one professor who says, hey, I know about this stuff. I've been working it in the lab. I'll work with you quietly, kind of thing. It's amazing. You find these people that understand that they have used these ideas and they're working them. But you got to find them. And then they're very quiet about it. It's an amazing journey this way.
Yeah, and a lot of people who are deep thinkers are not necessarily the loudest people in the world.
Yeah.
So.
Yeah, exactly.
All right. Well, we'll come back to discussion in a moment. Let me explain for those of you who are listening. I want to explain to you how to use 1Mby1M if you're considering using it. First and foremost, if you like what we do here, refer 1Mby1M to serious entrepreneurs. And everything resource-wise is at 1Mby1M.com. You'll find a terrific blog that a lot of people have been following for a lot of years because I started writing that blog in 2005. So, especially we were talking earlier about Freshworks and Zoho and all that, all that was part of our very early work in developing the Indian ecosystem, moving the Indian startup ecosystem from services to products and all of that. We did a lot of work in that area. So the blog has been very effective in supporting the entrepreneurial ecosystem for a very long time. You can also look at the Entrepreneur Journeys book series. There are 12 volumes of case study-based books. You're very welcome to study those. These free roundtables happen every week. Come as many times as you want. If you want to talk to me, it's usually once. After that, we request you to go to the premium program where you can talk to me every week. The premium program is our real acceleration program. And when it comes to investor introductions and all of that, that's part of the premium program. So premium members are able to access the curriculum, any amount of private roundtables, the introductions to actually customers, channel partners, investors, media analysts, whatever you want to access through our network, you're welcome to do that through the premium program. Now, just by joining the program, you don't get introduced to investors. You have to be ready to be introduced to investors. And that often, for many entrepreneurs, especially early stage entrepreneurs, it's a journey. It takes time, and it takes sometimes a lot of time before you're ready for investors. And you just have to factor that in and factor that into your expectations as you come into the program. A very useful tool that a lot of people use is the self-assessment that's on our website. These are the VC due diligence questions often, so try to answer them, compelling answers, strategic answers to these questions that kind of simulates a VC due diligence process for you. Some other resources, there's a free bootstrapping course that's less than 1 hour. It was commissioned by LinkedIn, and hundreds of thousands of people literally have done this course. So you're welcome to do it, free bootstrapping course on the 1M1M blog or on LinkedIn. It sets the philosophy that we have built 1M1M around. We've also recently started working with Udemy, and we've packaged a lot of courses, about 30 courses, and released them on Udemy. And this is, you can treat them as almost like a pre-accelerator course and a set of courses, and you can start your learning there as well. And they're very reasonably priced. Udemy offers a lot of discounts and so forth, and we offer a lot of discount coupons as well. So if you follow me on LinkedIn, you will get access to the discount coupons. We publish them on the blog as well. So keep an eye, just look for them, and you should be able to find the coupons and access another body of learning material for very inexpensive pricing. The 1M1M basic curriculum-only version is $99 a month, another super, super inexpensive way to access learning material. So that's it. Go to the website, dig around, look at, basic, premium, what to expect, FAQs, video FAQs. The curriculum is described in a lot of detail, and there are lots of case studies of thousands of successful entrepreneurs. So I'm not teaching this program by myself. There are thousands of entrepreneurs who have contributed their case studies, their learnings, their said, there is a policy, and the policy is articulated rather well on the website. Please study that. If you're coming to 1M1M for investor introductions, those are the policies. Our philosophy is bootstrap first, raise money later. Do not go to investors as beggars, go as kings. So we do prefer bootstrap first, raise money later. And that's something I think it looks like. I'm not sure how, Roland, you funded the first part of your journey, but it's great that you are that far along at this point. So
yeah, we use
congratulations.
friends and family, and that's classic way about 2 million has gone into the company, and that's all. And to get all this accomplished was amazing. Yeah, so we did it
terrific.
the way you recommend, because that's
absolutely
the only way I know.
Great. So free roundtables, there are 3 more in August. Next week, Maureen is off, and so we don't have any roundtables, private or public, next week. But we'll resume on the week after, and whatever time you need, you can register for public and let Maureen know that you need a slot on the premium if you are a premium member. That's it. If you have questions about the program, you can call Irina Patterson, 786-301-2456. She prefers that you email her and set up a time. But otherwise, she has been with the program all along, knows the program inside out, and she can answer any questions you might have. So now we have time for more Q&A. Anybody who wants to talk more, you're welcome to dial in or talk in public chat. And Maureen, you're going to have to moderate this because I can't see what's happening on the public chat right now. I still do not have internet connection. Anybody, questions? If not, we're going to adjourn, and we will see you in
There's a question for Roland in the chat. It says,
yeah.
Good evening, UpTerra. Can this be contextualized to African geography or farmers that cannot afford it?
Sure, I'll answer that. Yes, so the intent is eventually to give the hardware away and to have everybody produce it locally. It is possible. We've got it down to a printing device. So in every region, we'd like to give the hardware away and just license the software. So that, yes, our intention is to get this to the world in spades. There's a lot more philosophy behind the company. This is not just let's make a lot of money. This is about how do we reduce the cost. So we're just taking a little bit, and everybody has the software and the ability to do this themselves. It's kind of a philosophy of charitable giving, you know, like Tom's shoes. So we would like to do that. Right now, we're not quite in the position because you probably don't have the resources. And we're working in Mexico and Latin America right now with some groups that want to manufacture the device, and they'll pay us a nickel, you know, and license the software. So that's the first step. Africa, we've been approached, but there's nobody over there yet able to receive it and start there, but we will.
Great. All right. So I think that is all for today. I look forward to seeing you all next time. And meanwhile, lots of luck and lots of best wishes. Bye-bye.
All right. Thank you.